All right. In this explainer, we're diving into a really big question our source material puts forward about the future of money and power. It really boils down to this. Are we heading towards a future of centralized digital control or one with decentralized economic freedom? So let's unpack what this argument is all about. So to kick things off, our source material starts with a pretty startling quote. It claims that people like Jeffrey Epstein were involved way back in 2017 in a scheme, a plan for a pandemic designed to make a fortune for certain investors. Now, the source doesn't really dig deeper into that specific claim, but it uses it as a jumping-off point to introduce two powerful tools of control. And that's what we're really going to get into. Okay, so the first tool, according to the source, is a complete reimagining of what money even is. We're talking about programmable digital currency. And no, this isn't just about going cashless. It's about fundamentally changing what money can do and who controls it. This idea is called a Central Bank Digital Currency, or a CBDC. And the key word here, the one the source really zeroes in on, is programmability. Just like the slide says, this means the people who issue the money, like a central bank, could literally build rules right into your digital dollars. Rules that could control how, when, and even where you're allowed to spend it. So what are the big risks here? Well, according to the source, this programmability gives authorities some incredible power. We're talking about the ability to instantly freeze your transactions, or even, just take money right out of your account. And because it's all linked together, it's not just about monitoring your finances anymore. It's about monitoring all of your activities. The source even points out that the Bank of England has actually asked for these kinds of powers. Now, this source argues that this programmable money doesn't work in a vacuum. It's designed to work hand in hand with a second major tool of control, the digital ID. Think of this as the system that identifies who is allowed to do what. And the argument made in the source is that we all got a taste of this with vaccination passports. It suggests that these passports weren't just about health. They were a way to get us all used to the idea of a digital ID, a potential backdoor to a system where your identity is directly linked to what you're permitted to do. Your access could be turned on or off based on your behavior. Which, of course, brings us to the absolute core question from the source material. If you combine programmable money with a programmable digital identity, can you really trust the central planners who would control these tools not to abuse that much power? The source says, hey, this isn't some far-off sci-fi scenario. It argues this kind of power is already being misused, and it gives a few recent examples. It points to Canada, where the government froze the bank accounts and even crypto wallets of protesters. It mentions a report on Brazil's CBDC pilot, which allegedly has features built in to freeze funds. And it cites a case in the EU, where a critic was hit with financial sanctions that stopped him from buying food. So, you might be asking, how did we even get to this point? Well, the source claims this is all part of a very deliberate, long-term power play by central banks to completely reshape our financial system and lock in their control. This chart does a great job of showing the shift the source is talking about. You see, in the old system, central banks talk to commercial banks, and then the commercial banks deal with us. But in this new system, the central bank would deal directly with you and me. The source argues this is a huge conflict of interest. The regulator suddenly becomes a competitor to the banks, and on top of that, they could potentially get access to every single transaction we ever make. And what's more, the argument goes that central banks have a pretty bad track record. They create the very crises they're supposed to prevent. Asset bubbles, high inflation. And then they turn around and use that crisis as the perfect excuse to demand even more power and control. The source calls this a cycle of regulatory moral hazard. Okay, so is this centralized future the only path forward? Not according to our source material. It argues that there is a proven alternative, a different way to do things, a decentralized banking model. So here's the gist of how this model is supposed to work. Instead of a few giant, too-big-to-fail banks, the system is built on thousands of small, local ones. The argument is that these local banks create money where it's needed most by giving loans to small, productive businesses right there in their own communities. And since these small firms create the vast majority of jobs, prosperity gets spread around from the ground up, not just concentrated at the top. Now, the source is quick to point out that this isn't just some abstract theory. It offers up some pretty big historical examples that it says prove this decentralized model is a powerhouse for economic growth. First up, Germany. The source credits Germany's incredible 200 years of economic strength and its famous small and medium-sized hidden champion companies directly to the fact that it has historically had a huge number of local community banks. And then there's China. The source claims that China's lightning-fast rise as an economic superpower was actually kicked off when it moved away from a rigid, single central bank model and instead created 5,000 different banks to fund local entrepreneurs and businesses. But then it offers a stark contrast. It points to Europe, claiming that under the centralizing thumb of the European Central Bank, 6,000 banks, mostly the small, local kind, have simply vanished, which has just concentrated more and more financial power in fewer and fewer hands. So when you put it all together, the source material is basically telling us we're at a crossroads. It's a choice between two very, very different futures for our money, our freedom, and our prosperity. The source brings up this famous quote from Lord Acton to really drive the point home. The argument is simple. Concentrating this much financial and social power with a small group of central planners is just asking for trouble. It's a recipe for corruption and control. And because of that massive risk, the source wraps up with a very clear call to action. It says we need to resist these tools of centralization, the digital IDs, the CBDCs, and instead push for a return to a decentralized system, one that's built on a foundation of many small local banks. And the source material leaves us with this one last thing to think about, a question that really frames this whole debate. What's easier, finding people who can govern themselves, or finding people who are fit to govern everybody else? It really gets to the heart of what power is all about. Thanks for tuning into this explainer.